Ladies and gentlemen, good day and welcome to 2Q 2022 earnings conference call of Castrol India Limited. We have with us Mr. Sandeep Sangwan, Managing Director, Castrol India Limited, and Mr. Dipesh Bakshi, CFO and Whole-time Director, Castrol India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sandeep Sangwan. Thank you, and over to you, sir.
Thanks. Good afternoon, everyone, and thank you for joining us today. I hope you and your family are doing well and are safe and healthy. We are pleased to share that Castrol India Limited has delivered strong performance in the second quarter and half year ended 30th June 2022. I'd like to highlight once again that we follow the Jan to December period for our reporting. In second quarter 2022, Castrol India registered revenue from operations of 1,242 crores and profit before tax of 280 crores. Our second quarter performance was in the backdrop of a volatile market environment where we had to balance rising input costs while maintaining an optimal price and volume mix. And I'm sure all of you kind of been reading the news and the volatility that the businesses are seeing in the first half and slightly to possibly continue in the second half also. So to take care of the rising input costs, we effected 2 price increases in the first half of the year, which enabled us to deliver a resilient performance and helped our business stay ahead of second quarter 2021. Though we felt a bit of pressure on volumes and margins as compared to the first quarter of 2022, which is the sequential previous quarter. As we progress further into the year, we'll keep balancing the need to drive growth and serve our customers' needs while protecting our margins as inflationary and forex pressures are likely to continue in second half 2022. I'll now invite Dipesh, our CFO, to take you through our numbers and financial performance in a bit more detail. Dipesh, over to you.
Thanks, Sandeep, and good afternoon to all. Hope everyone is doing good. Let me share key highlights from our second quarter and 1H 2022 results, which we declared yesterday. In 2Q 2022, we reported a strong financial performance. Our revenue from operations was 1,242 crores, which marked a growth of 40% compared to 890 crores in the pandemic impacted 2Q 2021. This was higher by 0.5% from 1,236 crores compared to the sequential quarter 1Q 2022. Our profit before tax was 280 crores, and this was up 47% from 190 crores in 2Q 2021, but a drop of 11% from 311 crores in the sequential quarter 1Q 2022. With our 2Q results, our 1H performance looks good, with half-yearly revenue from operations of 2,477 crores, about 22% growth, and profit before tax of 591 crores and profit after tax of 435 crores. So that's up 13%. The board of directors of the company have declared an interim dividend of 3 per share. Overall, we remain confident of our strong business fundamentals and long-term profitable growth in India. I would now like to hand over back to Sandeep. Over to you, Sandeep.
Thanks, Dipesh. Besides the financial performance, I'd like to draw your attention to some key business developments at our end. First of all, building on our strategy to be future ready, we are foraying into service and maintenance with new formats such as Castrol Auto Service and Castrol Express Oil Change outlets. In second quarter, we expanded our Castrol Auto Service reach to 163 multi-brand passenger car workshops in 90+ cities across India. And our Castrol Express oil change outlets, which are present at GeoBP mobility stations across India, expanded to 39, and the plan is to further grow both these formats. The outlets offer two-wheeler consumers swift and reliable oil change on the go, and this is the Castrol Express oil change outlets. In addition, we are also exploring collaborations with electric vehicle OEMs to help advance electric mobility in India while continuing to launch new superior performing products in the traditional lubricant space. We strengthen our product portfolio with the launch of CRB Plus CI4 for agriculture vehicles and GTX Diesel CI4 Plus variants, upgrading the specifications of the products to offer better protection and performance. We launched Castrol Power 1 3-in-1 with synthetic technology. The new formula provides excellent acceleration, excellent protection, and smooth riding. The second quarter also saw the launch of our integrated campaign on Castrol Magnatech, leveraging mass media platforms, digital, connected TV, and digital innovations. The campaign highlights the superior protection offered by Castrol Magnatech from every start. I'd also like to draw your attention to a strategic global announcement made by BP yesterday, where BP plans to invest up to 50 million pounds, which is roughly about 500 crores, in a new global battery research and development center in Britain. This is of strategic importance to Castrol, as the new facility will be housed at Castrol's global headquarters in Pangbourne, Berkshire in UK, and the technology center is expected to open in 2024. This will give us new muscle to be far more relevant and competitive in the EV future, which is beginning to unfold across geographies now. And the new facility will also help us to work with car manufacturers around the globe to co-engineer future battery technology and associated thermal management fluids. It will also look to develop future technologies required to help to enable ultra-fast charging. This significant new investment will now allow us to build additional strategic technologies and capabilities to further advance EV fluids for the future, as I said before. And this facility will also be an amazing showcase to demonstrate our integrated technology expertise to customers as we help drive the transition to EVs. On that note, I'd like to open the session for your questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Parthiv Josna from NVS Brokerage. Please go ahead.
Hi, good afternoon, sir.
Yeah.
Hello? Yeah. Good afternoon, sir. Good afternoon. Congratulations on a great set of numbers, I would say, for half year. And so my questions are quite simple. The first question is, will the growth momentum continue for the next 2 quarters, that is till December of this year, considering, the vehicle sales have been improved and, the overall scenario as far as the four-wheelers are concerned, it is showing some kind of an improvement. Point number 2, sir, with, you entering into this new agri space of lubricants, what is the potential there? And so my third question is, how do you perceive this entire EV? Because you gave quite a good, description at the start, but just want to understand in detail, how do you perceive the entire EV space and the lubricants in the EV space going forward?
So, let me try and answer all the questions that you asked. The first question is, do we continue foreseeing the growth in the balance 2 quarters? I'd just like to remind that this quarter, the second quarter results should also be looked at in relation to the second quarter of last year, which during April, if you remember, the nation went through the horrible horrible thing of COVID second wave, or the pandemic second wave. So April in last quarter was a bit subdued. So while we expect growth to continue, it may not be at the same level in the third and the fourth quarter.
Okay.
But our intent is to continue driving growth.
Okay.
Point number one. Second is, as far as EVs are concerned, I think EVs will come. Okay, it's a question of when and how fast, not whether they'll come or not. But I think we are fully prepared for an EV future. I think I just like to remind everyone on the call that we foresee, based on our projections, given the low penetrations of four-wheelers in India, especially cars in India, we expect the lubricants market to continue to grow well into 2035, 2040s. Okay, so the traditional legacy business will continue to be strong while the world transitions, and we'll see faster transitions on three-wheelers and two-wheelers. From a fluids perspective, we've launched a global brand of EV fluids called Castrol On. Currently, it is being supplied to OEMs because in the aftermarket there's not so much of demand, given that the car park or the vehicle park is very small. But we have a range of e-coolants, transmission fluids, e-transmission fluids. We have a range of e-greases which are relevant for the EVs. Your third question was around agricultural sector. I think we've always played in agricultural sector. It's not that we are entering the agricultural sector now. It's an important part of our business. I think what we've done is we've introduced some new products in that segment which help us, our customers get better performing products and also the latest specifications. So agricultural sector was and will continue to be an important sector for us. Thank you.
Share of Castrol as on date?
Sorry?
The market share of our company as on date in the market?
So market share are, is it Sathak, you again? So.
Sorry?
I'm just, can you say your name?
Yeah, Parthiv from NVS Brokerage.
Yeah. So Parthiv, our share is around 21, 22%, and typically it stays in that range. And last year we grew our share. This year is also at similar levels. There are some segments which are up. We've gained share on cars. There's some segments which are under pressure due to all the rising cost inputs and the pricing pressures and the premiums, but it is in the range of 21, 22% in the automotive aftermarket, retail.
Thank you. Parthiv, I'll request you to come back in the question queue for a follow-up question. Thank you. The next question is from the line of Girish Shetty from Banyan Tree Advisors. Please go ahead.
Sir, thanks for the opportunity. So firstly, if you could help me out with the volume numbers for the quarter.
Dipesh, do you want to take that?
Yeah, sure. So volume this quarter was around 56 million liters.
Sorry, 56 million, right?
56, yeah.
Okay. And sir, just wanted to understand on a long-term basis, my first question is like, in the last 5 years, if I see your revenue growth of say around 4.5%, most of it has come from realization, right? And very few was around volume growth. So I just wanted to understand the future trend. How is the growth likely to come from? And if you could just give an idea of how the realization will tend to move and the volume would tend to move in the future. Would it be on the same lines or you're expecting something different?
So maybe I'll take that at a very top level. I think, and then Dipesh, you can expand on that. I think if you talk of the last 4 years, last 2 years have been COVID impacted. Okay, and that's why in 2020 and in 2021 the volumes actually were lower if you compare it to 2019. But I'm very happy to kind of state that in actually this year in the first half our volumes are ahead of 2019, which was a pre-pandemic normal year. So the intent is definitely to grow volume and also grow turnover. Right? And we made some interventions in some of the product categories where we thought we were too premium. So going forward, our intent is not only to focus on realization per liter, but also drive volume growth and top line growth through a combination of volume and turnover. I know Dipesh, if you want to add something.
Sandeep, I think you've covered. I was going to make a similar point. And then, going forward, clearly there is a focus on the areas that Sandeep had initially explained in his opening remarks around. We've got into the service and maintenance space. We've got these outlets which is growing month on month. So the focus is to find new avenues on how we can grow volumes, and at the same time, clear focus of growth and market share.
Okay. Thanks sir, for that. And my last question would be, so in the annual report you also mentioned about implementing a big change in your B2C sales model. So if you can elaborate or just give an idea on what is it and how is it progressing right now?
Yeah, so I can take that. I think what we've done is we moved all our distributor sales reps, which are around about 1,100 people, to an agency sourced model. So a professional sales agency, which is kind of hosting all our distributor sales, what used to be distributor sales people. And I think that's giving us very good results based on a number of factors. First of all, I'm really happy to say that we've been able to move all these 1,100 odd people to a formal employment structure, okay? Because in distributor businesses, many of these were getting social benefits, but some of them were also not getting. So we moved them to a more formal employment structure where they get benefits such as insurance, social security. So I think from a community perspective, it's a very good thing. The second is it's also helping us professionalize feet on street. So we are able to give them much better professional training, make them much more capable, and also improve the discipline of operations. As a result, we're seeing key positive influence on factors such as our coverage, our sales productivity. So overall, I think it's moving in the right direction, and we are very satisfied with the change.
Thank you. Girish, I'll request you to come back in the question queue for a follow-up question. The next question is from the line of Sabri Harzari from Emkay Global. Please go ahead.
Yeah, good afternoon. So I have two questions. Firstly, regarding this global this UK center of BP. So how important is it, or how substantial is it versus what BP has done so far in the battery and EV space?
So I think it's a significant investment. It's quite a significant investment, because so far we were researching on fluids, and as I said earlier, we've already launched a range of e-fluids based on our current kind of technological capabilities. But this 50 million pound investment or 500 crore investment will definitely give us much more muscle to work with OEMs, because a lot of European OEMs like the VW, BMW, Mercedes, they're all based out of Europe, and it gives us much more robust capability to work with them as EV technology advances. And if you would allow me to say, I think battery technology will be a key driver of future EV adoption, because the issues such as range anxiety, the issues such as thermal management for fast charging. So I think it's a huge step and significant step from BP or Castrol to become far more technologically advanced and be able to help our customers in the EV space. And how it helps India is globally, Castrol has our headquarters in UK, and we get access to all the R&D that our global innovation center does. So we will have access to better technology and better products for EV vehicles.
Okay, so this is more like an integrated thing rather than just being restricted to EV fluids. Is that right?
Yeah, So one is it will focus on batteries because we already have engine testing center and R&D capability as far as traditional internal combustion engines are concerned. Yeah. And now we're kind of investing in future technologies, and battery is a key area of technical innovation as far as EVs are concerned. So that's we're making the business future ready. That's why they invest.
So are you in any way suggesting that battery manufacturing for e-vehicles is something which might be looked into in the say medium term?
No, I wouldn't like to speculate. I think as far as our intent right now is to support the EV fluid development and battery, as I said, the thermal management of batteries. I think that's the scope of the conversation. What may happen or not happen in future is pure speculation.
Right. And just one small second question with respect to your non-lubricant businesses, whether it's like car care or other segments. Do you have a certain sort of a revenue or EBITDA target, EBITDA share target to be more specific, say 5 years or 10 years down the line? So how do you see about it, and how do you feel that in terms of the size, considering that's still a small market in India? What makes you confident that it can be like substantial, probably say 5-10 years down the line?
So responding to first part of your question, we've not set any target for EBITDA or anything like that for the next 5 years or 10 years. I think it's a as you yourself were saying, it's a very small category in India, but a category we believe will expand. Okay, it's like the decorators. Or when iPhone came, there was no accessories market for mobile phones. But suddenly, when iPhone came, there's a huge accessories market, and I think as the ownership of cars grows in India, I'm sure there'll be a huge play for car care products, and that's why we kind of tasting with this. Just to share with you, we expanded our presence to about 10 cities as part of that learning experience. We've learned about products, which products sell, which products don't sell that well. So we've made our product range much more sharper. Okay. And the intent is to kind of continue building that category. All categories start small, end of the day. And but we believe there's potential in this category.
Thank you. Sorry to interrupt you. May I please request you to come back in the question queue in case if you have a follow-up question, please?
Yeah, I'm done.
Thank you. The next question is from the line of Himanshu Upadhyay from O3 Investments. Please go ahead.
Yeah, hi. Good afternoon. So my first question was, I had two questions. First was on the consumer behavior, okay? Whenever we have seen such steep price hikes, are customers doing or prone to go to lower price points or down trading, or people defer the change or engine oil change? And how difficult is to get back the customers in down if they do down trading? Can you elaborate historically how the mindset of people have behaved?
So I think you see a multiplicity of behaviors, Himanshu. Okay, as you said, some consumers would postpone their services, okay, servicing of their vehicles, and some consumers would potentially look at cheaper options. I think the way we address that market is, first of all, we believe in giving the right value to our consumers from a product performance perspective. Okay, and it's not only our category which is inflationary. I think there's inflation all across. I think as long as you give customers the assurance of a good product that protects their asset, in this case it could be a car or a motorcycle, and helps build longevity of that asset, consumers are willing to pay a premium. And I think we have enough technological superiority in our products to deliver that value to our consumers. The second thing I would say is we just don't have premium products. We also have a portfolio of products across spaces which give consumers choice of various price points, various products across the segment. So that's how we kind of. But end of the day, I think if consumers trust a brand, if they believe the brand is giving them good value for money, they're willing to pay the premium that we have.
Just continuing on this, see, there are categories like where people use the vehicle for commercial purpose, okay, and there are categories where you use it for personal purpose. So is downtrading more prevalent in commercial, or is that the case, or you find whatever happens or the deferring happens in both the segments?
I think I wouldn't like to segregate commercial or personal vehicles, because at the end of the day, vehicle is an asset. Okay? In case of commercial vehicles, that asset is providing livelihood to people, so they want to take care of that asset. Okay. In personal mobility, that asset is for their own use, so they want to protect that asset. Okay. So I think the downtrading behaviors or deferring of services behaviors potentially occur more, I think, more in the personal space. Commercial vehicles, the vehicles have to keep running. Okay, that's why maintenance is so important. Any downtime on a commercial vehicle is a loss of revenue for the asset holder. So I think it's a very complex kind of a situation. But again, let me reiterate: if consumers or customers see value in our products, they'll continue buying us, and that's where we focus on.
And second question. See, we stated in our annual report that on industrial side there was strong momentum, but second half the momentum got reduced. Okay, and so how is it? And one more thing, on B2C we are making a lot of efforts to grow that business, and which may have eventual challenges, okay, very long dated challenges. Okay, but on the B2B segment on industrial, okay, and marine, okay. Where the challenge is not going to be there, at least in the foreseeable future. Okay, what special or what efforts can you do to make that bigger and more profitable and sustainable? Are you thinking about putting more services on that business, and what is the traction in that business on the industrial side?
So pretty long question, and I do want to kind of give time to others also to ask the question. But in summary, I think in the second half of last year, the industrial products industrial sales are related to manufacturing activity in the country, and I think we just felt a bit of a slowdown in the second half in the overall kind of environment, and that's why we saw a slowdown. I think. As I said, the traditional lubricants market and automotive also will continue to be strong till 2035, 2040. That's our projection. Time will tell. But we're also focusing on industrial products, and like automotive, our focus on industrial is in segments where we can give a differentiated value proposition to industrial customers, and where we can make a difference in performance of their machines or their equipment or their assets. So there are specific sectors we play in where we can be differentiated and premium. And this is an area where we will continue investing. And then even in industrial, we're also kind of moving from products to products and services. Okay, so giving digital solutions, working on areas such as predictive maintenance, so that we can help create value for our customers. So industrial will continue to be a focus area.
Thank you. Himanshu, I'm sorry to interrupt you. May I request you to please come back in the question queue in case we have a follow-up question, please?
Yeah, I said thank you.
Thank you. Participants, we are in the last 15 minutes of the call. We request the participants to restrict to 2 questions per participant. In case if you have a follow-up question, please rejoin the queue. The next question is from the line of SM Kumar, retail investor. Please go ahead.
First of all, congratulations to Castrol management to provide an excellent set of numbers and a good dividend. Sir, I could like to know about what are the future plans regarding EV, how much capital allocation towards the EV research space? Can you throw some color on that?
Dipesh, do you want to take that?
Yeah, sure, Sandeep. So, as Sandeep mentioned earlier, EV is front and foremost as part of our strategy, right? And the way we are investing in EV is on twofold. Firstly, the investment is happening at a global level, and the benefits of those investments is also taken by growth countries like India, where the advent of EV is going to be much faster than what it has been in the past. So that's one, and building up this technology center is clearly an example of that. On the other side, we are constantly in conversations with the OEMs, and basis that whatever investments we need to make in the plant or in terms of our business side, we have cash on hand, and that's clearly a part of our strategy. I'm unable to give you at this stage a clear number if that's what you're looking for, but in our forward-looking plans and strategic goals, this is at the core of our strategy.
Okay, so my second question regarding Jio and BP partnership. How much charging center can we expect next year same time? Any numbers?
So I think I won't like to talk about Jio BP. My request would be to reach out to Jio BP press office. They have a press office, and they'll be able to answer your questions. I cannot answer on their behalf.
Okay. Yeah. Okay, thank you. Thank you.
Thank you. Next question is from the line of Akshita Ray from Green Portfolio. Please go ahead.
Thank you for the opportunity, sir. I have two questions. My first question is based on EV lubricant. Like EV transition is very much visible, though still on a small scale, but with rapid growth. In this reference, can you please tell me how much rupee worth of various oils like engine brakes, gear oil, etc. used in ICE against EV in a year?
Oh, I don't have those numbers because the market is still evolving, and I think depending on the kind of technology the EVs will evolve to, will determine the number of fluids, because you could have in future, let's say, liquid immersed batteries for better thermal management. So right now, what I can say is in the dry battery spaces, the requirement of e-fluids is much lower than what you use in an internal combustion engine, because these vehicles don't use engine oil. But I don't have any rupee comparison or rupee numbers to share at the moment.
Okay. So my second question is also on EV. Like assuming that ICE vehicles stop running on roads and EV has taken over 100%, further assuming that we have same share in EV fluid market as we have today in lubricant market, what will be our sales on full year basis?
Too early to start speculating, on that. I would say our intent is to also have leadership in EV fluids, okay, as that market evolves. As I said earlier, as far as India is concerned, I think even in 2035, 40, there'll be robust lubricant demand. Just to give you a number, our car penetration in India is about 22 cars per 1,000 population. Okay, in China it's in the 300s, in Europe it is in 600, and in US it is in 900s per 1,000 population. So there's a lot of room for growth in penetration, and all this cannot be fulfilled by EVs. Okay, because EVs have to be a combination of infrastructure and everything. So that's why we see pretty robust growth getting into 2030s or early 2040s as far as India is concerned. And how EV technology will evolve in 2040 could be very different from what we see today. So that's our view right now. While we're working on a future EV ready business, too early to start kind of projecting on total sales volumes and how will 2050 look like. So I think it's too early to say that.
Thank you for answering, sir.
Thank you. Next question is from the line of Vipul Kumar from Sumanga Investments. Please go ahead.
Hi, sir. Congratulations for good set of numbers. My question is, what percentage of turnover right now we are getting from EV-related products like fluid and etc., and where do you see it 5 years from now?
So first of all, thanks for your comment. I think just to put things in perspective, last year only 0.2% of total vehicle sales were EV. So currently we supply EV fluids to two of the larger car manufacturers, and which is in India, But in terms of numbers, it's still very, very small. It's insignificant to our total business.
Okay. And where do you see 5 years from now that number? Any guess, sir?
It'll still be pretty small.
Pretty small. And my second question is, sir, base oil prices must be coming down with crude oil prices. So benefit of that, which quarter will it get reflected?
Dipesh, do you want to answer that?
Yeah, I'll take that, Sandeep. So, firstly, I just wanted to clarify that not always do you find crude linkage with the base oil in terms of the price increase and decrease. And, if you follow some of the comments we've given last year, it was the opposite last year. But having said that, from the projections that we're sort of looking at, it feels like in our third quarter, the pressure on the base oil price will continue, so it will continue to increase. And towards the end of the last quarter, early next year is when we will start seeing softening of the base oil. I think the other factor that worth considering is foreign exchange is clearly an element of the overall input cost, and with rupee at all-time high, that definitely puts a bit of pressure on the margins. But we have a hedge strategy. We are covered in 3Q, so from that point of view, we are well placed. Yeah. But in summary, seeing today's prediction, late fourth quarter is what I think base oil will come down.
Thank you. Vipul sir, sorry to interrupt you. I'll request you to come back in the question queue in case if you have a follow-up question. The next question is from the line of Nimesh Maheshwari from RS Ventures. Please go ahead.
Hello. Congratulations on good set of numbers. And I have one question only. Can you share the split of revenue among two-wheeler, three-wheeler, or like four-wheeler EV and commercial vehicle space? How much revenue you generate?
Dipesh, do you want to take that?
Yeah. So, no, I'll probably talk about the core business breakup. We keep EV separate. EV, as Sandeep mentioned, it's early days, so that's a small part of our revenue portfolio. But in terms of the turnover, almost 50% comes from personal mobility, which is cars and bikes. And then commercial vehicles is roughly around 35 to 40%. It ranges depending, and then the balance is the industry portfolio.
Okay.
Yeah.
Thank you.
Thank you. Next question is from the line of Hemang from Kotak Securities. Please go ahead.
Hi, Sandeep. Thanks for taking my question. I have a couple of them. So, you all just spoke about base oil prices, but just to get some more sense of that. Towards the previous quarter, we had indicated base oil prices being about 900, which had increased to about $1,000 per ton, or 1100 rather. Could you please help with what, base oil prices have averaged roughly for this quarter? And, when we look at, base oil prices easing out towards 4Q, in the previous year, base oil prices averaged about $1,200 to $1,300 per ton. I understand you can't give an exact number on that, but what would your sense be? Where should that number settle around? And the second part was on the realizations front. If we look at realizations in the previous few quarters or even on a YY basis, you all have done a really fantastic job in, raising realizations like give or take 20, 25 odd rupees. How do you all look at realizations going forward? Has there been any price hike which you all have taken to pass on base oil prices in the current quarter? And, when you look at that from a possibility, from a demand elasticity point of view, how does that actually work out? Do you all have enough pricing power to be able to continue with these price hikes, or does it start impacting personal mobility at a particular point? And how is it also working out in the CV space?
So I think I'll answer the second part of your question on pricing, demand elasticity. I think we monitor the situation very closely, and I think as I've always maintained, it's a fine balance between volume expectations and margin protection, and we'll continue doing that, and we'll continue taking actions. For example, we took price increases, but somewhere on two-wheeler segment we felt a bit more pressure, so we gave a consumer price of promotion, which is in public domain, nothing secret about it. So we gave 15 rupees offer later on Active, which is one of the largest brands. And we will continue monitoring the situation as we go forward into second half of this year. And the situation is going to stay volatile. The base oil prices haven't really started coming down, as the case was saying. It's a multiplicity of factors. It's availability. It's what refiners do, because they're getting better margin on diesel now, so because use base oil versus diesel. So they're all kind of factors that go into base oil pricing. On the first part, average prices, etc., let me hand over to pass it on to Dipesh to take that part of the question.
Yes, Deep, thanks. So you're right. I think initially, I think last time I said something around 1100 is where we were looking at, and that's exactly where we kind of landed on 2Q. I just wanted to clarify, I mean, this is not, I'm not just talking about our consumption rate, right? I mean, this is really the market rate as well. We have a medium-term contract, and we do lots of activities to make sure that, we get the best rate. But just to give you an idea, 1100 is what the base oil was average around this quarter. And going forward, it is expected to go up in 3Q. It will come down in 4Q. From a pricing point of view, again, we again don't look at it very tactical. We took one in March. And by the way, that quarter we are talking about something like 900, 950. And we knew 3 months going forward, this is the range of the base oil. So we put that into our pricing strategically. Again, if base oil is going to go up in the next couple of months, we will decide, looking at the next 3 to 6 months horizon, whether we want to take price increases or not. But you just go back last 4 or 5 quarters, you will see that our sales per liter and our base oil costs or COGS per liter, we manage our margins in a way that we are able to recover, but make sure that we don't become high premium. And that's the way we make sure that we protect our margin.
Thank you. Hemang, sorry to interrupt you. May I request you to come back in the question queue in case you have follow-up question, please? Thank you. The next question is from the line of Hemal, individual investor. Please go ahead.
Yeah, hi. Thank you for taking the question. I actually have a similar 2 questions actually. Other expenses went increased a lot this quarter on quarter. What was the reason for that? And if you can share where you believe, like how much of a rise do you think the base oil will have in quarter 3, like $50, $60 or even higher than that?
Yeah, sure. I can. So other expenses, includes various elements. It includes interest rate. It includes insurance, travel. Yeah. So when you look at previous quarter, clearly there are variable costs which are dependent on volume increase, and the freight is one such, which has actually been a double whammy. But of course, volume freight goes up, but then there is a variable cost increase. So freight is one element of that. Then last year, not everybody was traveling, more from the sales side, and we are all in the market. So, from that point of view, although this is within our plan, so we don't see a reason to worry, but that cost has gone up. And the other element is general inflation, insurance costs, term insurances, the health insurances, the transport insurances. There's a huge downside on that cost. So those are the 3 or 4 main reasons why the other expenses have gone up.
And where do you expect the base oil price to go next quarter? As you're saying, it's expected to rise. What is your estimate?
I mean, about anything between $100, $150.
Also 10%, right? Okay.
Yeah, maybe more. It's very difficult to predict. See, I mean, because there is an element of forex as well, right? And
Right.
I just wanted to say something more. Base oil is one part, but when you look at that overall COGS portfolio or input cost, there are other elements as well, right? Like additives, packaging, and sometimes when base oil goes up, there is a corresponding effect on some of the other aspects of the input cost also. So it's a mixed bag in terms of the overall increase. So we wouldn't want just base oil to be a key element for when we take pricing decisions, because then we also have some forward buying, so we leverage on that as well. Yeah.
Yeah. And absolutely sorry, final question. What was the volume growth here? You said 56 million was the volume. What was the? I don't have the last year's number. So if you can tell me last year's number or the volume growth.
So we grew 20%, 22% actually over last quarter, 2Q21.
Okay, perfect. Thank you.
Yeah.
Thank you. Ladies and gentlemen, due to time constraint, we'll take that as the last question. And I'll hand the conference over to Mr. Sandeep Sangwan for closing comments.
Yeah, thanks, Nirav, and thanks to all the people who asked questions, and thanks for your interest in Castrol. And I think as management of this company, we will continue to focus on top line growth, which has been one of the areas where we are putting in some programs and initiatives which are beginning to bear fruit. So top line growth will continue to be a focus, and it will be a combination of volume and realization. And I think we are committed to also protecting our margins, but giving fair value to our consumers and customers, and keeping that balance right. And have a good day, and hope to speak to you at the end of the next quarter. But our sense is the second half will also continue to be very volatile, but we have good capable team, as in the management team and the people that we have in our business to face those challenges. So thank you for your interest, and have a good rest of the day, and stay safe. Thank you.
Thank you.
Thank you very much. On behalf of Castrol India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.